What's up, everybody? It's CF Crypto TA here, and I'm also known as Crypto Dante in other social media. And today we're gonna go through Bitcoin and what happened in the last month or so, and what we can expect from it. As you know, I haven't been doing any stream for a while. Was pretty busy at work, and so didn't have much time to look into doing some videos, but I'm back. I'm back for you guys, and let's start and jump in Bitcoin on the monthly time frame. So what we can say here? So we obviously see that Bitcoin is in an uptrend. I'm using the Binance, so the data it's a little bit limited from the historical point of view. However, I will keep to Binance because sometimes I found the Bitstamp has some spike in volume and which are not really mirroring the market. Anyway, so what we can tell from what we see here. So we see that Bitcoin is in an uptrend, in a clear uptrend. This one was the 2018 bear market. We had the correction in 2020 from the COVID, and now we are in the current correction of 2021 from the rate hikes. So what we can see is that we had a logical spot where Bitcoin could be rejected, and this one was the top over here. We can see there is a resistance with this pinpoint bar, which is almost a doji, long-legged, and you can see that this one was a good point to look into going short, okay, for many, especially with this psychological bar that was around 60,000. Now, what we can also tell is that we have another support, an important support here at 29. So currently what happened in the last year, Bitcoin was basically doing a trading range. So it was moving sideways, sorry. Even if obviously if you were in the market, didn't feel like so, and in this leg up you might have done quite well, good money, and here you're losing a bit. But still, we are in the macro view in a side range, in a big side range. Now, what else we can tell is that also if we use the 20 monthly moving average, we can see that the bulls has successfully defended right now the 20 moving average, the 20 period moving average, which was also a good support back in 2020 with the COVID crash. So bulls has actually defended this moving average, which is a good bullish sign. However, what we need to do is also go in lower time frame. Now, another thing that I want to use is the 12 MA, and I want to show you that actually we had a breakdown from the 12 MA, which is a good support. It was a good support for the last year, and also if we go and use the B stamp, we can see that when the 12 MA breaks down, usually we have a strong downward trend. We can see it here as well. We had the breakdown, reclaim, breakdown again, and we had a strong reaction following it. And we can see here that the reaction has actually started to happen. Now, the question is, are we in a bear trend? Are we in a primary bear trend, which is completely different, which this one was a primary bear trend, or we are just in a correction? Now, to do so, we need to find out, we need to go in lower time frame. Now, if we go on the weekly, let's see at the weekly. So we have still these two important zone. One is the resistance zone and the support zone. Now we can also create and find other resistance zone, which are important level to be claimed to turn bullish. Now what we can tell is that we have formed a downtrend. This is a medium-term bear trend. Why? Because the asset is continuously doing lower low and lower high. lower low, lower high, lower low. We just settled the lower low, and now we are in for a possible lower high. Now, what we can also tell, we can use a different MA as we done before previously. We can use the 20 and the 50 MA. I'm gonna take off just the support and resistance zone for a little bit. Now we can see here that we were talking before that the 50-week moving average for me was an important level to hold in order to stay bullish. Now, at the moment when the Bitcoin broke below the 50-week moving average, I complete turn bearish. We can see here we had a proper breakdown of um the moving average with this close over here, and the reaction was a strong reaction on the downside. So I exit over here. I'm completely out of the market, and we had this strong rejection downwards. We can see that this one was an important level to hold. Let me take off the volume. We can see it here in 2020 in March with this COVID crash. This one was support before, the 50 MA was a support, and then there was a breakdown, and we had a strong rejection down. Also here, now you can't see it because by in B stamp you would see as well the 50 MA running through here. When we lost the 50 MA, there was a bear trend starting. Now I'm not saying that we are in a bear trend, in a primary bear trend, but I firmly believe we are in a medium term bear trend. And this is normal for assets. We can't always go in a straight line up, but we have usually correction. Now, if we can use some notion from technical analysis from the CMT, which I'm studying right now, and we can say that the Dow Jones, okay, so the Dow theory, explained to us that every rally usually correct for as a correction in the opposite direction, a healthy correction, which sits between 30% and 60% of the assets, so one third to two third of the rally. So what we can tell here, we had the two different rally. We have the first one here, which was the first leg up, and I will explain later what I mean by that. And we had correction, which was healthy, which was about 70%. This one, so it was a little bit more than 66, but still it was a healthy correction. We made a new higher low, and then the real bull trend started. Now, what we can tell here is that currently Bitcoin in May, when we had the first crash from the top, he actually just correct to the 20% level. So this one is not really, it cannot be really considered a strong correction. So considering the strength of this move up of this rally and listening to the Dow theory, we would expect a correction to around this area here, the 0.38 of the Fibonacci level. Now, another really interesting notion that I want to share with you is that we know that markets, they usually move in waves of in 5 waves. Okay, so we have usually 3 impulsive waves, so it goes up and up. These one are the impulsive waves, sorry, and then we have correction, which are the wave 2 and wave 4. This one is the Elliott Wave theory. Now, although some people they are skeptical about Elliott Wave, I found it to be one of the most accurate technical analysis in the space. So we have the first wave over here, wave 1. We have the second wave, the correction, wave 2. We have wave 3, which was ending here, and now we are still in wave 4, so the correction, and then we will have the fifth leg, so the last impulsive wave up. Now, correction in Elliott wave after the third wave, because in the first wave, so wave one, usually the wave two correct between 50 to 70% of the previous rally. And we can see here that I put it before in the Fibonacci level, retracement level, we could see that was around 70 to 80%. So it was meeting the criteria of Elliott wave. Now, what we can see here as well is that usually wave three correct to the 30% of the previous rally, and usually is the wave four of minor degree, which I won't go into because it becomes um, too hard to understand right now and to explain in such a little time. Now, what we can see here is that if we use a Fibonacci extension level, usually the wave three run between 1.618 of the previous rally. So it's usually extending 160% from the previous rally. And sometimes if it's an extended wave, it goes to 200, 240, and so on. Now we can see that this one was an extended wave. So usually extended wave, they often retrace to the 20% level, so to this level over here. And we had this retracement, and I was thinking that we were starting a new leg up just because actually the retracement for me was completed. However, he always says that the most common level is the 0.30, is the 30%. So what we can expect here is then this retracement to end around $22,000. Now, what we can also note is that Elliott Wave, Ralph Elliott, told us that the correction usually there are different type of correction. So wave two and wave four are different type usually, and usually they always alternate each other. So if here there is one type of correction, here there will be another type of correction. Now I'm gonna go through the simple correction, which are zigzag, flat, and triangle. The triangle, which is this one over here, you can see it here. This is one type of correction. Then we have the zigzag, which is the one that was made in during the COVID crash. So A, B, C. So it was also used in Dow Theory, the ABC correction. And then we have a flat correction, which is usually in a side range, like this one over here. So we have the top here, we have the support, okay? And usually we have different type of flats. We have a regular flat, expanded flat, and running flat. So the regular flat would be up here and then either stopping at the support or just dipping slightly below. Okay, and Ralph Elliott and other technician, they found that the most common level where the flat retrace is usually 130%, between 120 and 130% of wave A. Now, if we take our extension tool and we extend, so project wave A, which is this one over here, from the end of wave B and targeting 120 and 130, we can see that the level which we stop is usually, it would be 24,000. Okay. Now, they also said that it can be extended like any other wave. So like wave 3 was extended here. Also wave C can extend. Usually also wave C has a common personality with wave 3. So they're usually very emotional waves, very painful for the market participant, and usually quite high in volume and very sentiment when we talk about downtrend. So what he says that it can also travel to the 160%, but anything below 160%, then we have to assume that a new bear market has started, a primary bear market has started. So if we consider that the our correction can end between the 30,000 level and the 18,000 level. And also what we said before is that usually the market retraces to 30% level. We should have assumed that our bottom might be between 22,000 to 24,000. That's my assumption. Okay, this is an hypothesis. Now, what we can also do, we're gonna go lower time frame, okay, on the daily, and what we can tell, there is other things to tell. Now, why we think that is a flat? Flat are made of a different wave, okay? So we can subdivide the flat in different wave. Usually there is a 3-wave down, then a 3-wave up, and then a 5-wave down. Now, what we can see here is that we have a 3-wave down here, okay? This is one. Then we have another 3-wave up, which is, which is clear here. It's very clear. This is really, really clear. A 3-wave up. And then we should assume that we started a 5-wave down. Now, just to for the purposes of make it easier, I already made the subdivision. Now let's find it out here. No, not this one. Then it's this one. Yes. So as you can see here, what we can tell is that I create the Elliott Wave channel, which is this one over here. So what does it say, Ralph Elliott? So to find the different targets for the next wave up and also the correction, we need to run a channel between the top of wave 1 and the top of wave 3 and the parallel line down, connecting the bottom of wave 2. So we can see that we have a clear channel here. This is the closing channel, and this is the swing channel. And we can see here that we have a clear line coming up. And look, where does it stop and where does it intersect is either at the level 30K level or at the 22,000 level. So now, considering this, we can also assume this hypothesis that the downtrend can continue to 22, 24 level. And then what we can also do is subdivide the wave C, because it's 5 waves, and find the different 5 waves and the different target for the waves. Each wave also, so wave 1 is subdivided in other 5 waves, and so on. Wave 3 subdivided in other 5 waves. So we can see here, I labeled the first one is 1, 2, 3, 4, 5. This is wave 1 of wave C. Then we have wave 3, which is the one that we just almost completed, is 1, 2, 3, 4, and I am expecting now the last leg down. Okay? And then this one will be 1, 2, 3 down, 4 up here, which is the relief rally, and then we go down to the 22 level. This is my hypothesis for now. And now I want to continue by saying that we can also use other way to understand if the bear trend is ending. We can see here, now let me take off this one. We can see here that actually it's common that when we have a trend, we form a channel, and we can see that actually Bitcoin has just formed a channel of this medium-term bear trend, and we can see that we are trading between the boundaries of this channel, and until this trend line over here is broken, we can't assume that a new uptrend is started. So we have to assume that we keep our bear trend down. We can see also that the 20 MA has been working as a resistance for quite some time, and we often reject this resistance and move down pretty violently. So what is happening right now? Bitcoin is exactly fighting with the 20 MA. So what we can expect here, logically, is a possible rejection. So a possible rejection that which will bring us all the way down to the 29 level, which is a good common level for